Okay, I think we're good to go. Good evening, everyone. Let us know in the chat if you can hear us, see my screen. How you doing, Duck? Maybe an audio check on your half would also be cool.
Good, good. How are you?
Yeah, not bad, man. Not bad, not bad. Friday the 13th, great date to do a live stream. Uh,
Truth, truth.
but yeah, no, it's all good. I think our audio is working. Some reliable faces, some seemingly new ones as well. Thank you for joining us. Richard, 5 a.m., of course. Aaron, Alvaro. Nice, nice. Hope everyone's doing well. I've got some stuff to talk about. Some interesting, some probably less interesting. And Friday is a good time to kind of kick back and answer your questions as well and go off topic on stuff that you find interesting. So let's do that. Let me do the intro as well. First things first, thank you to Bybit for sponsoring Technical Roundup. We quite literally wouldn't be able to do this without their support, or at the very least, we wouldn't bother, really. Isn't that right? I mean, come on, 3 fixed live streams a week. I'd do like 6 one week and then 0 for 3 months or something. Anyway, their support is very much appreciated, and you can help support the shows by checking out their links in the description below. That would be very much appreciated. Thank you to Bybit. And also like the video if you haven't already. Those little things really help us out, so click that thumbs up and subscribe if you haven't already, given that we are terrible at cross-posting the live streams for other places. So if you want to be here for Monday markets and Wednesday markets and all the important videos during the week, make sure to subscribe. It also just helps us out a lot. Did I miss anything?
I think that's all.
Nice. Oh, and the newsletter, I guess, right? That old thing. The crazy
Oh,
thing is, I want to tweet it every single time, but we've been writing Technical Roundup for a year now. Every single Tuesday, without exception, including like Christmas Eve and New Year, right?
yeah.
Technical Roundup has been coming out every Tuesday without a break for over a year now. And also again, thanks to Bybit, it's free. So I mean, we've learned a few things since that time. I think it's a pretty good piece and product. Not really a product, I guess. I mean, you are the, you are the. What's that saying? Like, if you don't have to pay for it, you are the product or something.
Oh, shit. Yeah,
Anyway,
but that's always negative.
yeah, I know it's always negative, yeah, but still, technicalroundup.com. Sign up and get our levels and charts and all that fun stuff. How are you doing?
Good, good. A little bit tired because my sleep schedule is actually like weirdly early now. Like it used to be that I'd just be up till the middle of the night, and now I go to bed at like 8,
8.
9. Yeah.
Yo, that's crazy. What? Like hours before the daily close?
Yep. So I get like, because in the morning, I don't know, I felt like in the morning there's been more action, and I've always slept through it. So it's like, one, it's more healthy to kind of get up early, I feel like. Just feels better, you get more sunlight.
Yeah.
And then the other thing is like there's more action, so why not?
Yeah, that makes sense. Dude, I remember I got into a very hellish sleep schedule when I was spending like Christmas/New Year in Moscow. And it would get dark, like sort of just no sunlight at around, I don't know, like it felt like sunset was at 3 or 4 p.m. or something ridiculous, right? And then my sleep schedule was nuked. So I'd go to sleep when it was dark, and I'd wake up and it was it was dark again, and it was just this
Yep.
hell loop for like a week of just pure darkness. And that's why kind of Scandinavian people kind of off themselves a lot, right? Because they just go through these long periods with no sunlight.
Yeah.
It's not good.
I mean, it's a beautiful country and very cool people, but I mean, you don't get to see it because it's dark all the time. So
Yeah. I know during Ramadan, there are certain stipulations about like the times of day in which you can eat, and I think there's some portion of it which is based around the time of day and sort of sunlight, etc. And I'm sure someone in the chat could correct me, but at one point in St. Petersburg, you were only getting like 2 hours of like an hour and a half, 2 hours window of sunlight per day. So like when those traditions came to be, like in Saudi Arabia, etc., that part of the world is a bit more reasonable and a bit more manageable, because the sunlight hours are more reasonable. But then
yeah,
you
but
take this. Go on.
don't you eat like during the night? during? I'm
Dude,
like,
it's weird, but I mean, I read this article basically how it's so difficult to adhere to these religious uh, commandments, if you will, in certain parts of the world because they're just not built to be international.
yeah.
So yeah, that's also just an off-topic sort of thing. Donald is right. Someone screams in caps lock. Yeah, I know. And also, Scandinavian suicide rate is a myth. Actually, it's actually okay. So I'm just making shit up the entire live stream. Great. Okay, you know what? Let's just go to the charts. That's it. My alleged expertise in life and just outside of bloody candlesticks has just been melted in the chat within the space of 2 minutes. The title I chose for this was also Vasily says, "Cred, please keep talking with this exact speed. Please don't boost it." Oh, God, this is great because in my YouTube videos on the channel, the only comment I get is, "This is very detailed, but this video could have been like 20 minutes long," which it couldn't have been. It's crap. And I'd rather re-emphasize something than have to repeat it in another video or reteach it, right? But so all the commentary on YouTube is like, okay, this is going on forever. And then whenever I do Casual Friday or like a Twitter clip or whatever, everyone's like, "Dude, what's the rush? What's your problem? You should really learn to take your time with how you present yourself." Can't please them all, taken quite literally.
You can never please. Like, I don't know. The problem with all of like social media and in general, like stuff online, is that you're only ever going to interact with stuff if you like have a problem with it.
Mm-hmm.
Because you see, at least for most people, that's true, right? So like most people just watch it, and if they like it, they're going to be stuck watching it, right? They're not going to be there typing. And if they don't like it, they're going to be there typing, so you're going to see that. So no matter what you do, it's always going to be bad.
Yeah.
Because the only people that you're going to see say anything are the people that don't like it. At least that's how I tell myself how it works. Otherwise, I would have to.
Maybe you're just really unpopular. Have you thought about that?
Yeah, that's the other option that I tend to try to block out. But yeah.
I haven't really noticed, like, this is somewhat market related. Andre says, "Smash that like button." Yes, definitely. I haven't noticed the new influx of, like, I guess it's a bit too early, but market cycles, really aggressive ones, bring, like, new waves of participants, right?
Mm-hmm.
Like, there are some people in the community who are pretty, like, clearly belong to a 2018 sort of group, and they intermingle and do similar stuff and work together on stuff, etc. Same can be said for 2017 and the ones before that, and I'm sure some later entrants in 2019, which is fine, right? You build your own micro community and make things happen for people with whom you started your journey, which makes sense. I don't think we've seen that yet of like 2020 entrants, which is interesting and arguably bullish, but I guess the argument there is those people only, those communities only come to form after the hype cycle to some extent is done, right? It sucks people in, they kind of hang around and watch it, and then something corrective happens and they're still there, and that kind of forms the bedrock. Do you agree with that at all? Or what do you think of this whole thing?
I totally agree. I think in general, if you would say there's new people in the space, I think there are new people in the space, but they're mostly kind of professionals and the serious kind of money.
Mm-hmm.
I mean, people say the suits are coming. I think that's largely true. You don't really get the influx of like normie people. You only get like big money come in, like at least it feels like that. So you do have new people. It's just not the people that we are used to. So you're not going to see them on whatever Twitter in the comments asking for targets, in my opinion anyway. So it's like using that kind of information. And I mean, it might just be anecdotal, right?
Yeah.
You never know. Maybe it's just like those new people that actually, like the retail new people that come in, just hang out in different avenues than we are. But so far, I haven't really seen much of it. But I think it makes sense when you see that, when you see like the serious money come in, to kind of not necessarily like the altcoins, for example. That's one of the things that I think, like when you have like super trash altcoins, they're going to be largely pumped by people like us retail, right? You're not going to see like these, I mean, just Sailor, for example, going into like what's their attendees or like any of that crap, right? You're not going to see that. You're going to see them like pile into Bitcoin, right? and pile into maybe ETH, maybe something like of the larger stuff. And yeah, I think that's an important kind of distinction to make. And
Does that
then
mean we
once
lose an indicator in terms of like retail mania frenzy type of stuff, or does it just take another form?
I mean, in general, I think when the pump isn't really caused by retail, like the Bitcoin pump isn't really caused by retail. It's not necessarily like a lot of people are like, yeah, this is just gonna play out like 17 played out, right? Where you had Bitcoin pump and then Bitcoin kind of top, and then you had altcoins kind of take off, right? And if you kind of make the case that this pump is not really retail, but like a more serious crowd, that means that the aftermath of the pump is probably going to be different as well. So yeah, it's a new territory, I'd say. So it's not as easy to kind of say, okay, this happened in 17, so this is going to happen again. I think anyway, but we'll see how this all plays out.
Do you think like, because I mean, one of the prevailing narratives has been about derivatives, right? Or maybe the lack thereof. And you have the spot-led rally, and no crazy signs of overheating via derivatives, etc., etc. Is it fair to equate retail participation with derivatives? I've always found this quite strange because on the one hand, you'll have arguments being made for when retail gets bullish, like retail gets bearish, etc., and people use derivatives to measure that, right? But at the same time, when discussing kind of noobs entering the market, it goes full 180, and people start discussing what noobs are going to be looking at on Coinbase, and like how much Bitcoin can I buy with my few grand versus like XRP is quote unquote cheap per coin, etc. I've always found it somewhat contradictory and not entirely clear what metrics to use when we're talking about noobs. Has your view changed on that?
And it's really, really difficult, I think, to kind of make a judgment call on it all. I think like the noobs, you don't really have that many noobs in the space right now. Like most people, I'd say, most people that I see and kind of move in the space in general either have been here since, I mean, most people kind of joined at the highs, right? So December 17 to like all the way through 18. And those people kind of acted in the way that they said, okay, this is super cheap. I'm gonna buy that just because, I mean, the upside's much larger. Even though, like for some of the coins where you have like a huge market cap already, and they see like low prices, and then they're like, oh shit, it's a low price, disregarding how much there is of it, and then it pumping, right? But I don't think that's necessarily gonna happen again. At least not if we're like, if you expect it in the next few percent of Bitcoin's run, right? Let's say Bitcoin goes to 50K and the market goes absolutely nuts, and then you have everyone talk about it again in the media everywhere, and then you actually get a lot of new people, then I could see it repeat itself. But like to current conditions, right? If you're looking for, okay, where do we get the old season, whatever, that we had in the past, I'm not entirely sure if the price is kind of like has attracted as many noobs as it needs to kind of pump those kind of trash coins back up. But I could be completely wrong on that. I'm just gonna watch charts, see what's up.
Yeah, I've seen something interesting in Coinbase listings, right? Something we discussed, I don't remember where. But back in the day, dude, maybe some people aren't like fully aware. I don't know exactly what our audience demographics are like. I bet a lot of them are very much used to the idea of a Coinbase listing dump, right? Like when the VCs come and list some shit token that you've literally never heard of in your life, despite spending like 18 hours a day on crypto Twitter, and you just never heard of it at all, and then Coinbase lists it, you check it out, and it's just like a VC exit pool. It's like, great, thanks guys. But back in the day, like back in the day, like the idea, and I say this only 2017, not that long ago, but in crypto terms, it's obviously a lifetime. Getting the very idea of getting listed on Coinbase was like the most insane thing ever, right? And like even a rumor of a Coinbase listing would be enough to just absolutely send something, let alone something actually being listed on Coinbase would just be a mega moon. I remember like there was a period of time where under every single XRP, under every single Coinbase tweet or bit of media you could find, there was like a whole XRP army just blowing that thing up, being like, "Oh, list XRP, etc."
Yep.
And for a long time, that just died. Right, stuff was getting listed on Coinbase. Their regulatory direction and their listing criteria just became really weird, in my opinion. They lost that kind of prestige of being listed on Coinbase, in my opinion, at least. And then suddenly, now, very recently, like Civic, for example, totally useless shitcoin, in my humble opinion. Stuff like Civic, etc., being listed on Coinbase, but it actually pumps, right? Which is a bizarre shift in conditions. And maybe there are some noobs sending money to Coinbase and seeing what's the most of a token they can buy, even if they're spending the same amount of money.
I mean, it doesn't really take much money to move those, right?
Yes.
Like, that's the thing, right? It doesn't really, you don't need a million people to move these coins from the current, like, values that they have.
Yeah.
But yeah, the funny thing with the story that you told about XRP is actually that the XRP folks asked for the Coinbase listing for ages. And then when it did get listed, it actually just straight up dumped off, which is funny to me. But yeah, it kind of changed over time. Like when the market is bullish, underlyingly bullish, you have Coinbase listings and you have Binance listings, and they just explode. And then when you have the market bearish, right, those are exit pumps. And I mean, it's just how markets work in general, right? When you have when the market in itself is strong and you get positive news, they explode upwards. And if you have the market underlying weak and then you get positive news, that's usually the news to sell into, right? So, for example, I mean, I've talked about this a lot with regards to EOS, for example, where you had that news come out that who was it, Apple or Microsoft or whatever, I don't even know anymore, already forgot, kind of said that they would run a validator node or something, and it was like this big deal, and it pumped by like, I don't even know, it was like 50% or something. And then Google Cloud, yeah, I knew it was something of that
big
regard.
blue chip.
Yeah, and then it dumped, right? And it's down like, I think it's down like 50% since then. Let me
more
quickly
than a full
check.
retrace. Yeah.
Oh yeah, it's like 40% down since then, and that's because the underlying market was weak, right? All coins were doing poorly, and then when you have news come out at local bottoms that are positive, and you don't have too many bag holders, I mean, you just get explosions. So yeah. I mean, you can kind of judge how strong the market is based on how altcoins in general react to positive news.
Do you think that applies to Bitcoin, like the impact of both negative and positive news?
Yes,
because there was the
I mean,
whole
that's one of the
argument
main
every
things they
single
trade
hack.
off.
Yeah,
or
well,
like
yeah, those hacks, right? It's like OKEx and Binance and all this, and the market was just printing higher lows the whole time. I think that was around the time we had Gainsey on. I think it was one of the questions we wanted to discuss or did discuss, where like, do you give any weight to the idea that if the market were indeed vulnerable and there wasn't this eternal bid going on, that these news events, either in conjunction or all together, or even on one of them on their own, would be enough to tank this? But if it's not tanking it, that in itself is an underlying sign of strength. That's something you subscribe to, right?
Yeah, definitely. I mean, it's one of the best things to trade off, in my opinion. It's like the best method to actually see where the market in general is positioned to go. So if you get like super bearish news and you're chilling at support, and then the support just gets like the bearish news dump gets just completely bought up, you know that the market is ready to go higher, right? I mean, it doesn't always work out that way, but it's a definite sign that there's people at that level interested to buy no matter what. And yeah, I like that stuff. When I see like bearish news or bullish news for that matter, when you see bullish news, you saw that with Bitcoin at the highs, right? When we approached 20K and you got that bullish news coming in, the futures would be like super bullish for Bitcoin. And I mean, we rallied into the event, but then really didn't do much.
think the day
And
futures went live was the top, right?
yeah,
Like that.
so it's kind of like, yeah, when you get positive news, when you get bearish negative news, and price reacts in a way that you wouldn't expect, it's something to look out for, in my opinion.
Yeah, that's well said. I've got Monday markets coming up, so I'm personally not going to do a mega deep dive on Bitcoin. Not that there is a ton to go off of,
Yeah.
but opening up like my high time frame chart layout thing on the weekly, it's one of the interesting things to discuss potentially is if there's going to be sell pressure near or at these levels, right?
Mm.
Who's selling / where is it going to come from? Because as price obviously approaches to all-time high, the lifetime percentage of buyers whose entry is underwater reduces, right? Becomes lower. Now, obviously, it's not like an equal distribution. Like a lot of people bought at the top, which is why it was the top and, got flushed, etc. But generally, the higher price goes, I mean, arguably, from a break-even standpoint, the incentives to sell are reduced, right? Because you're at least break-even, if not up already. So if you didn't sell whatever 3k, you're probably not selling 16, right? So in your mind, if people arguing for a pullback or some sort of consolidation or some sort of chill factor, especially now in this arguable area of resistance. Now, as we've written in Technical Roundup, this is a really kind of thin air type of area, right?
Yeah.
There's a lot of structure at kind of 10 to 11, sort of anywhere from 10 to 12 is good structure. 14 is like just about, not even great, but like there's some stuff there. But anything above that is, you kind of have to start using your imagination a little bit with round numbers. And you can see I've got that consolidation from, what month is that? Yeah, well, obviously the start of the year, so the January 2018 consolidation. But again, that's me going back, years, finding 1 week of trading and using that as a potential structure. So not the most compelling thing in the world. Now, my personal view is, even if it's not entirely compelling from a kind of sell this resistance point of view, you could still make a case for pullbacks on lower timeframes at these levels, because they're still levels, so they're still at least valid for new buyers entering the market or even adding to existing positions, right? So if it's an area where there can be an influx of new positions, depending on how the market's set up, etc., that in itself is always subject or potentially subject to a flush, right? Like the idea that you have some sort of agreed upon value area where you get increased participation, those are kind of the main 2 ingredients for volatility either way, depending on who wins out or who's right. I just wanted to get your thoughts on the whole macro argument, I guess, in terms of selling pressure / who's selling up here, and maybe to the audience, there's a gentleman in the audience saying, but who's buying at those prices as well, which is also, I guess, an interesting corollary to that.
Yeah, I mean, I think with regards to the argument, who's going to sell this, right? I mean, price is up a lot. So, I mean, it's not like everyone in this space is just here to just ride Bitcoin to like 100, 200, 300K. There's a lot of people just trying to make money with it. So I think there's always going to be sellers at certain price levels, right? But in general, I think this entire rally has been one where buyers haven't really gotten any pressure yet, right? So, I mean, we've gone up pretty much, even if you go all the way back, we've gone up from 3.6K all the way to 16K, and there's not been one big shakeout the entire way up, right? So no one really has gotten, at least on the buyer side, obviously on the seller side it's very different, has gotten in any kind of trouble, right? So it's the question of, okay, if it goes lower, what are the new buyers going to do, right? Are they going to panic, or are they just going to add? So far, it's just been like every time price dips a little, buying has shown up, right? And I think the best kind of example is 10K, which, in my opinion, like was bound to break, and then you just got stupid buying at those prices. Which, I mean, like I was bearish into 10K, and then I saw that and was like, okay, it's not gonna break down. And
funding was quite indicative at that point as well, right?
Yeah, so it's like you have some, I don't know who it is, what it is, but you definitely have someone show up at every single dip and just buy it up or bid it up. And in like it's not necessarily the case as it was back in the day that is mainly to just like based on derivatives, like people trying to just run up small accounts into huge accounts. Like I don't think that's the biggest part of it. So I mean, yeah, it's gonna be difficult to make the stump, and I don't think it makes much sense to kind of guess the top. It's much better, in my opinion, anyway, to just wait and see when this kind of structure of okay, it never breaks down actually starts breaking down, right? So you've never had any kind of breakdown on the daily.
Yeah.
Even when you look at the daily, when you look all the way back, you've never made any kind of significant structural damage, right? It's just been straight up. And I think it makes sense to just kind of assume that it's just gonna go up until that changes, and then you get a big pullback. And that's been my mantra for a while now. Like I haven't really felt the need to just put the account on the line and short big just because we had high prices. Just based on the fact that there's not really been a sign of weakness on behalf of Bitcoin.
You made an interesting point. Sorry, go on, finish.
You've had bearish news. You've had stupid rallies, like overextending, and it hasn't caused anything. Like it's not rolled over. And until that happens the first time anyway, like I think if it starts rolling over at any point, right? And I mean, it could roll over from this structure. I don't know. But if it does start rolling over and then break support for the first time, then there's going to be a second leg to that sell-off because people are just going to keep buying the dip again, the first significant dip anyway. And I think it makes a lot of sense to shake them out as well.
Yeah, that's
but
what
until
I
that
was
happens,
you. You mentioned like this. I mean, I agree that structurally, if you're a dip buyer, pretty much on any time frame, which is the crazy part, right? People talking about like pullbacks on lower time frames, etc. Like I'm looking at the weekly and I'm seeing no pullbacks at all, right? I'm looking at the daily and I'm not really seeing any pullbacks at all. It's just like consolidation higher. You know, there's really no heat, and as you mentioned, no real difficulty to contend with. Even on the intraday, if you have like a market structure following type of system, for the most part, that's been pretty uninterrupted. And in the short bursts that it has been interrupted, gets bid straight back up, right? Which is fantastic. And something we wrote about in the newsletter as well, and that brings me to a second question as well, but I'll ask the first one first, is that in trends like these, it's kind of just better to assume bullish until proven otherwise, especially if all the boxes are being ticked on the way up. And then as soon as they stop being ticked, that in itself serves as a useful red flag of potentially something maybe different here. But the question I want to ask based on what you said is, you mentioned, and I agree, how those dip buyers have taken no heat on the way up. Do you think that has a kind of net cumulative effect? That because it's been so easy for so long, when you actually do get something more disruptive, if you do, on higher time frames, that the reaction will also be overextended once participants realize that it's not some 5% red candle to buy?
Yeah. I mean, it's just in general, when you have a market where you don't have anyone under any kind of stress, right, for so long, it just makes sense that once you do actually get something like that, that you actually get like a decent sized correction. Could be, I mean, who knows what this, it always depends on who's buying, who's selling, right?
Yeah.
So maybe there are people in the shadows just buying every single dip up. And if that's the case, right, I mean, who knows how long they can do it, right? And where price is going to go. But in general, I think the moment support starts rolling over, you're actually going to have some new buyers under pressure for once. And then you actually get a pullback. And I think it's going to be a decent sized one. But where that's going to happen, I don't know. Like if the bidding continues, right, like the next kind of support that I'm looking at is in the 15.
Do you want a screen share, by the way?
Come again?
Do you want a screen share that level?
Yeah, I can. Give me a second.
Make sure to close all those other tabs.
I'm fine on that front. Yeah, so this is the next kind of support area. I said this last stream as well. And before that, I mean, you can see the boxes that I've drawn on the way up, right? So I've always said, pretty much the entire way up, I've said the same thing. Like, if you start rolling over, you should break this box, and it never happened. And I was like, okay, if you start rolling over, you should break that box, and then you can actually start turning bearish. Never happened. Same thing here.
Yeah.
Same thing here, right? And you can try to short these tops all you want. And I think if you're really good at that kind of trading style, that's fine to do. You still get like decent sized moves. But you have to be quick in and out, right? But let's say this starts rolling over, and I don't know if it's going to happen from here or if we just move higher, do the same, put in a little bit structure, move higher, and then do it from there, right? Start rolling over, start losing support for once. Then I think you're going to get like a bounce, because a lot of dip buyers are going to buy the dip, just how they've been trained to do this entire rally. And then you're going to get a significant sell-off.
Pavlovian dip buyers.
Yeah, and I mean it's been pretty good for everyone that's just been blindly buying the dips, right? So I mean, for these dip buyers, I don't really see anything wrong with continuing doing to do that until it stops working, right?
Yeah.
And it's the same. Like if you're on a long bias and you want to long this thing, that is kind of your invalidation, right? Where you start, like, let's say you positioned yourself somewhere in here or somewhere even up here. You don't want to see this get lost, because that would be a change in behavior. And that's something to look out for, because the behavior has been parabolic up and no support gets lost. And the moment that behavior changes, the brain dead buying the dip strategy is probably not going to work anymore. Yeah. And then you might get some chop, like maybe it's just chop, right? Maybe you break this and then chop here and you try to long it and get rolled over several times before it goes higher. Or you actually get like a significant kind of pullback. Either way, you're not going to have much fun if you just keep on doing what you've been doing the entire way up. Yeah. And it obviously doesn't really matter where it does happen, but when it does happen, it's just something to look out for. And it's honestly pretty nice trading if you kind of have that as your invalidation, because you really know, okay, price has been behaving this way. I want to do what I've been doing until it stops doing so.
I think that's a really good point. And people forget, like, I'm by no means an amazing trend trader or anything. Like, I've got some stuff in how I use directional bias that helps. But just in terms of framing things, if you're in an uptrend and you avoid longing because you think, oh, well, what if it's the top this time? That is not how you trade a trend, right? It's like the complete opposite of trading a trend. You must presume that it's intact until it isn't. And so every real kind of setup within that framework is an opportunity. And if you keep sitting out on all those opportunities just because of this background underlying fear of, okay, what if it reverses this time? Well, it doesn't really matter, right? Like, I agree that there are things and levels and structures which may cast doubt over, okay, this trend looks like it's coming to an end, etc. But that can't be your starting point, in my view, if you're trend trading, right? Like, you've got a downtrend and you get like a rally to sell a lower high, you do that until you're invalidated. Same with an uptrend. You're getting a dip for a higher low, you get involved, and if you're invalidated, you'll probably be invalidated, as we discussed, quite spectacularly. The important thing, if you're going to act on those dips and rallies and execute such a trend following strategy, is that you don't double down when the shift in conditions happens, right? That's where I think most of those strategies get rolled over completely, where they know to kind of buy the high time frame structured dips, they do it, and then as soon as it fails, their bias doesn't shift. And even if there's 10-20% drop until the next level, they'll kind of average in or buy worse levels and just keep doing it on the way down, despite a notable shift in behavior. So I've been guilty of that in the past, of establishing like a really, like, my directional bias, whatever system, would tell me that this is like an uptrend or a downtrend, or market structures, bullish, bearish, whatever you want to call it. And I would genuinely be afraid to buy the dip or buy what I think would be a good candidate for a higher low, or in simple terms, to buy support, because I was thinking, well, yeah, this just worked the last like 3 times. What if it just doesn't work this time? What if this is the top and where the trend reverses? And I think you just can't have, from experience at least, like, you just can't have that kind of mindset in a real trend. I think it's a losing mindset overall. I'd rather be in the market, have a pulse for it, etc., and have really clear, predetermined criteria for reversal, rather than seeing every dip in a bullish market structure, or every rally in bearish market structure, and thinking, right, no, what if this is the one which reverses the trend? Like, generally, continuation is much more likely and will happen much more often than reversal, right? So I think one's trading, for the most part, should reflect that. Don't know if you agree.
I mean, it always depends, obviously, on what kind of stage the market is in, right? So, I mean, when you have a market that's just been mercilessly chopping, you obviously have to trade differently
and that's
to a market.
trendless for a large part, right? So
yeah, but yeah, I totally agree, and we'll see. I mean, this is literally like one of the clearest kind of examples that you can get for how, like, this is going to be your most obvious change in behavior once it does happen.
Are you going to tweet it out? Can we hold you to that?
Yeah, I mean, sure.
Nice.
But the problem is, like, I don't know why I've been branded as like this perma bear on Twitter. No idea why. So people are going to be angry at me when I
Because you were
tweet
bearish
that.
from the whole way up, bro.
Yeah, it's a little bit annoying, but I mean, it is what it is, right? But yeah, if it does, like, let's say we do like pull in another rally to highs, put in like a base, rally again, and then, I mean, I'm not saying this is going to happen, right? But I mean, it could be happening here too, where you just start selling off and then start actually losing levels. Then for sure, yeah, I'm going to be talking about a shift in behavior. And I'm going to think that that's going to lead to the first pullback that we've seen in this entire rally up. But who knows where that's going to start? Someone asked in the chat, like, do you about the 30 to 40% pullbacks that we've had in 17 and 16.
Yeah.
And I mean, I think that's still going to be the case. You're still going to see those large pullbacks. The question is just from where, right? If you're just trying to short all the way up because you're like, okay, this has to correct 30, 40%. It might correct 30, 40%, but only to the origin where you actually started shorting while you've been thrown out the entire way up. So, I mean, if you're a bear in general, if you're a bear in these kind of markets, right, you gotta be very precise and can't be too kind of stuck in your bias. So if you see something like at 10K where it's like, okay, I'm bearish, I think this should correct, like on a macro scale, and then you see this kind of weird activity, this weird buying, then you have to kind of get rid of that mindset. And if you're not going to flip bullish, just sit on the sidelines, see how it develops, in my opinion, anyway.
Well said. Yeah, I think I agree in terms of shifts in conditions. Just kind of bringing up my chart for a moment there. Like, generally, the kind of stuff I'll use for that, on the aggressive side, is failed breakouts. So price falling back within a consolidation when it shouldn't. So even taking this most recent daily structure we broke out of, if I draw the highest close off of that level at 15,450-ish, which is acting as support, like on its own, for the most part, these breakouts have held from these consolidations. I mean, the last one did at least, and on lower time frames, that pattern is a bit more common. So of the very early / aggressive shift in behavior would be a pullback to the top of the range, which actually fails. That would kind of be the first arguable red flag. But again, I think that's tentative because, yeah, it's short-term weakness, whatever, and it's actually a bearish pattern playing out, which just really hasn't happened along the way. It's just been full of breakouts which hold, bearish SFPs which fail, etc., etc. So that would be one to look out for, but I, for the most part, agree actually losing kind of downside support, which for me would mean making a lower low close. That would be quite indicative because, as you can see, like there aren't even that many daily candles to deal with. But as we've been trending up, and certainly after the reclaim of a really key level at 12K, which we also know is weekly structure, all these low closes or lowest low closes on the daily, they've just been holding a support like the whole way up pretty perfectly. So for me, that would be the first real shift in structure. That's kind of something I use anyway, regardless of strongly trending environment or not. Whenever I get a lower low close on the daily time frame, off of a decent level, especially here where the lowest low close led to a higher high, so some extra market structure significance there. If that occurs wherever it occurs, you know, again, as the Duck said, it could very well be the case that this current price action ends up forming a new consolidation, lower low close, trades higher, and God knows where that type of pattern happens. But when it happens, I think that'll be quite a telling signal of some sort of higher time frame pullback, and at least one that's going to be visible on higher time frames. I think that's the main point here. There obviously have been intraday dips, and even on the daily time frame, those red candles have been maybe paradise for short-term bears on really low intraday time frames. You haven't had a lot of time to manage those positions, but in terms of a pullback that would be visible on some sort of higher time frame, I think at least a daily break in market structure is required if you're going to be arguing convincingly for a kind of monthly, weekly, etc. visible pullback in the trend, in my opinion, anyway.
Yeah, and in general, like the Bitcoin rallies that have gone like the one that we're seeing right now tend to kind of top out with blow off tops, and we haven't really had that yet. I mean, this rally has been different, I would say. So the top of it might be different, right? And I mean, the top might be just temporary for just a short time, but we're obviously going to get a pullback at some point. It's just a question of when, right? So yeah, we'll see. We'll see how it all plays out. I'm really curious how, like, what's going to happen once we actually do pull back. If the dip buyers are going to keep bidding this up to infinity, or not, we'll see. We will see.
Yeah. Someone mentioned in the chat, and it's something we talked about on stream as well. Donman calling ETH to 260. No offense, you just got to admit when you're wrong. Still enjoy watching your analysis though. I think there's some time frame clarifications that are perhaps worth making with regard to ETH.
Yeah, I mean, I've been bearish ETH. That's very different from Bitcoin. And I mean, I've been bearish ETH based on the ETH BTC chart and the ETH USD chart as well. But I mean, the ETH USD chart is still going to take some time to kind of play out. Still 17 days till the close, till that's invalidated. I mean, when you're dealing with high time frame stuff, right? And I mean, it's every time I kind of pull up a high time frame chart, people get confused. And they're like, holy shit, how can you target like 100% moves up or like 40% moves down? That make no sense. But I mean, the chart just plays out like the same, just on a bigger time frame, bigger scale in general. So, I mean, when I was bullish here at this support into this resistance, right? That's the same thing as being bearish from this resistance into this support, even though it kind of seems like that's a huge kind of move to make, right? But yeah, I'll say that I'm wrong, and I mean I will have been wrong once we start closing this monthly candle actually above 400. So I mean I'm not even saying anything against that. It's just in general I've been saying ETH is going to be weaker than Bitcoin, and it clearly has. It's just I mean I've been caught off guard by the Bitcoin move a little bit. Not really been shorting into it, but I mean, didn't expect it to go this high, this fast. Mm-hmm. And that's been pulling up ETH USD. So yeah, could very well be wrong on ETH. That doesn't really have anything to do with the Bitcoin view though, which, I mean, is actually, okay, if you start breaking down, I'm going to be bearish. Until then, I don't really see a reason to. And with ETH, it's a little bit different, but then again, I mean, I'm not short ETH. I shorted this move down and then just got stopped out the last time I tried. And that's fine by me. Like, that's how I trade these kind of things. I just short them and keep doing it until it stops working. And then once it does stop working, which happened at this breakout, I just stop. And that's fine by me. Yeah. It's not really about being right all the time. It's about making money. And yeah.
Listen, you can't say that with a large Twitter following and YouTube channel, okay? It's all about being right.
Yeah.
Yeah, I mean,
that's... Go on. Sorry. Yeah, no, you go on.
You sure?
Yeah.
Yeah, for me personally, I agreed and still agree until invalidated with the monthly analysis on ETH that I still think 400 is a really good level, and I need to see that purely invalidated. But look, I was a very early ETH bull, but it was just at the last high, like here. So I longed this high time frame flip of the 390, 400 area. Like this retest, which looks fantastic if you remove that engulfing candle, which we didn't talk about, right? Like any other day, any other setup. Like if you gave me that again, I would happily take it. It's like 4 weekly closes, whatever. 1, 2. It's like the third weekly close above a monthly level, like support being held, intraday timeframes, etc. I had just like I mentioned in the tweet when I actually mentioned that the trade was taken. I have no regrets about punting that 392, I think, or 394 long. And my exit was a bloody... Listen, that trade exit, as I always joke about, was one of my best trades of the year. I got out at 387 and also mentioned that like in a real time for people who care about that type of stuff. Tweet as well. So, like, I know about being bullish ETH because I fell for it the first time, if you will, the really nice flip, which I have no regrets taking. The only thing which makes me uncertain ETH, as I mentioned on Monday, is this resistance structure, which I'm just frankly not sure about. And this is something I sent to you as well, Duck. I don't know if you remember it. It's this kind of consolidation that we formed on the way to all-time high, right? Which is basically this cluster. Right, impulse, consolidate, and then all-time high. So there's this range here, and it ends up also being the origin of the bear market, essentially, the base before the drop, which took ETH to its lowest price, and that's currently the structure that we're trading into. So I think there is some caution is arguably warranted for ETH. The obvious counter-argument to this is that, Cred, you're full of shit making up levels of resistance. The real weekly breakout has already taken place because we fully engulfed the whole weekly nuke, right? The consolidation, weekly nuke, fully engulfed, currently acting as support. And that is an amazing kind of counter-argument to that, if you will. And to be completely honest, no part of my system tells me which of those is more compelling. Is it a retest of this high time frame resistance, which is the origin of the bear market drop, and it's only the real kind of second test of that structure? So is that a bearish retest, or do we have a weekly bullish engulfing of the whole massive sell-off into a kind of U-shaped type of thing? And I have absolutely no idea is the answer there.
Yeah, I mean, ETH's going to be interesting. I think ETH's going to underperform Bitcoin. And I mean, I stand by that until we actually start getting like bullish signs on it. The best kind of chart to look at for that is ETH BTC. And I think that still looks very, very bad. It's obviously easy to kind of flip it back bullish. And you just need to get like a good candle going. And altcoins have been known to do that. But yeah, until that changes, I mean, I'll happily say, I mean, that I prefer Bitcoin over ETH. And then the moment it starts actually showing signs that it actually wants to outperform Bitcoin again, I'll change that view.
What would that look like for you? Is it the reclaim of that old, basically the multi-week support we broke down from? Because some would argue quite reasonably that ETH BTC is like retesting support now, right?
Yeah,
I've even seen some comparisons that it looks like Bitcoin at 10.5k. Not quite sure how much I agree with that. But
yeah, I think that's an ETHUSD comparison, right? Yeah.
Yeah. I mean, it's like the ETH BTC top level hitting support on like the previous high. And
I've seen it for both, actually.
What's that?
I've seen it for ETHUSD and ETH BTC, like people making that comparison.
For you, what would make you bullish ETH BTC?
So, I mean, I showed this last stream, and I've made a tweet about it too. So you've got this range that we failed to hold, tried to make a bottom, didn't hold, broke down, right? And then we had this bullish move up into the range again, got rejected around the range high. I mean, not too kind of clean, but still in that area, and went all the way back to range low. Now you could say, okay, why wouldn't you just buy range low? And I mean, I totally get buying that range low. I think it's completely valid to do. I just want to see it break one resistance to kind of make the case for me. So make the case, okay, this is actually strong even against Bitcoin for me. So break this resistance here, go back above it. And then you actually have the FOMO chart readily available to you. So you have that inverse head and shoulders that everyone's going to look at. Right now, it looks like it's failed this level and it retested it and got rejected. And I mean, last time I streamed, I think we were exactly at the level, and I was like, I want to see how this goes. And so far we've been rejected by it. And until that kind of changes, I'm going to be of the opinion that ETH's just going to be weaker than Bitcoin. And I mean, I think it makes sense, right? If you're expecting if you're expecting Bitcoin to kind of put in a blow off top or put in a rally or any kind of sustained up move, you have to also expect altcoins to underperform it. It's just how the market has been moving in the past. Whenever Bitcoin goes to new highs or in general just rallies really hard, altcoins usually can't keep up. That doesn't really mean their USD value has to go down. It just means that you'd be better off holding Bitcoin, right? So either you're expecting Bitcoin to go up, and then you don't want to be in an altcoin like ETH because you're going to be outperformed by Bitcoin, or you expect Bitcoin to pull back, where you don't necessarily want to be in an altcoin because you're going to lose money against USD, right? So for me, the time to kind of long these isn't really there yet. I want to see Bitcoin put in a top and put in a retracement, and then that's where I usually start looking for opportunities. Because when Bitcoin puts in these kind of rallies, right, the BTC pair suffers all the way up. Yeah. So you're going to get dumping on the altcoin BTC pair. And then when Bitcoin does this, which it likes to do, it puts in huge retracement of the rally, then you're going to see the altcoin Bitcoin pair maybe stay flat or maybe go up even a little, but Bitcoin just pulled back by 30%, so you're going to lose regardless. And then actually when this is done and over with, or like at the last leg of this correction down, then you're going to see money kind of go back into the altcoins, and then they start outperforming Bitcoin and outperforming the dollar. That's how it's been in the past. I mean, I'm just going to go from like how I've traded it in the past in general, given that we are at high time frame support levels. But yeah, I mean, could play out different this time. Maybe the suits start buying like Dogecoin for some reason. I don't know, but I don't see it. So for me, it kind of makes sense to either be bullish Bitcoin and therefore be bearish altcoin Bitcoin pairs on like at least on the higher time frames. Obviously, you're going to see big rallies on the lower time frames. On some of these pairs, you've seen rallies of like 50, 60, 70, 80% even in the last few days. Mm-hmm. But like on the bigger coins and on the macro scale, I think you're either bullish Bitcoin or you're expecting Bitcoin to pull back. And in either case, you don't want to necessarily be long too many altcoins because you're going to get cheaper buys no matter what happens. If Bitcoin goes up, you're going to get more altcoins for your Bitcoin. And if Bitcoin goes down, you're going to get more by just buying with USD.
Mm-hmm. To some exception, the arguable exception to that is USD pairs, right? Which is something we always have to come back to, it seems, on these streams because it's so prominent. And that's so much as volume. Like, you know, YFI, the perp, the linear futures contract for that. I mean, on FTX and stuff, the amount of volume that's being churned by these stable-coined margin instruments is just absolutely insane, right? Becoming hard to ignore. And that's, I think, a good thing because the correlation is far less explicit, right? Like we've seen YFI, Aave, and other arguable blue chips, although that's a bit of a meme, I know, but whatever, like notable DeFi projects and other more popular instruments just do well in or just move enough to give you trades in both directions, despite a lack of trend change in Bitcoin dollar, right? So I think that's a plus because it kind of gives you just more stuff to trade without necessarily being bound by those correlations which you accurately, in my view, laid out with regard to Bitcoin going up, alt BTC pairs, the relationship there. I don't know if you agree, disagree. I just think there's a decent opportunity there.
I mean, in general, what you're going to see with these altcoins, you have an altcoin that is high, for example, YFI, right? Mm-hmm. And it goes through its cycle, it goes up, and then it starts going down, right? The first dump's always going to be more aggressive than on other pairs. So, I mean, YFI went down much, much lower than all the other coins did, or like most of the other coins anyway. I mean, from high to low, even against Bitcoin, this is an entire cycle, right?
Yeah,
if you bought the top, you've left with 10% at the bottom, right? And then obviously the relief that you're going to get from that dump, and this is funny because it actually pretty much exactly went through. But the relief that you're going to get from this is obviously going to be greater than on the other ones. And the fact that this was actually hyped before it started this kind of downward spiral means that you actually still have eyes on it, right? So for example, on EOS, I mean, people know about EOS, they know what's up with EOS, but they don't really give a shit, right?
Well, in comparison, not until Brock Pierce becomes president, mate. Then they care.
Then they will, yeah. But the thing is, like, in comparison to that, this is still new and shiny, right? The EOS kind of thing, I mean, that's been handed down a million times. This is still new and shiny, so people still have hope, still have dreams, right? And once it starts bouncing, it's going to bounce harder. So in general, you want to have a list of coins that do well in the bull portion of it, and then dump really hard during the bear portion of it. Because if you get any kind of bounce, those are going to bounce harder. And I mean, that's just the name of the game. That's how altcoins have like moved pretty much forever now. I mean, same with EOS back in the day, right? People are always like, why are you talking so much about like these old coins like Litecoin, EOS, whatever? I mean, back in the day, those were these coins, right? I mean, it's just, I mean, the Wi-Fi is just the EOS of 2020.
Old man yells at cloud. I can see it now.
Yeah, but I mean, you got some crazy, like, look at this. You've got a massive pullback, the first pullback during this trend, and then you get a massive rally out of it, right? You still have these dreams of people getting rich and EOS doing whatever for the world. And it's the same thing with the new ones, where you get these big dumps into big rallies. I mean, for Wi-Fi, I'd be surprised if it did the same as EOS did back then. As in just break the highs, but I wouldn't count it out. Just something like this, where you have like a stupid rally on EOS and a dump and then this pump. You can compare these coins; they kind of act the same way as long as they're new. And then once they get old, this stuff happens, and no one really cares anymore.
Yeah.
So
what would it take for you to start trading, for example, alt USD pairs, or get you interested in those properly?
It doesn't make sense to me.
Why not?
Because the thing is, like, either I'm going to be bullish Bitcoin and then I'm going to want to be long Bitcoin, or I'm going to be like bearish Bitcoin and then I don't want to have the USD portion of this, of like the old USD pair dragging me down, right? I mean, the best kind of pairs to trade, in my opinion, just from okay, I have an idea where the market is going, is just the Bitcoin pair. I'm obviously, I mean, I do trade the USD pairs from time to time just because I'm forced to do it, even more so now with MEX just being out of the picture. But the altcoin Bitcoin pairs are the ones that interest me the most, because when I'm buying altcoin, I'm not really saying, okay, like for example, XRP USD. If you bought this in September of 19, right? You still break even. You're like, okay, I didn't do poorly, right? I'm break even. It's not bad. I mean, could have done better, but I'm still break even. And then you look at the prices that Bitcoin was at in September of 19. I mean, we can do that real quick. September of 19. And then you realize, okay, Bitcoin's almost up twice from that. And I fucked up, right? Because you're going to be angry. Let's say you're all into that, like you're all in XRP. You're going to be angry that you've been all in XRP and you didn't even realize that you were losing against the benchmark. So for me, it always makes sense to kind of try to outperform Bitcoin if you're trading altcoins. If you're not trying to outperform Bitcoin, just trade Bitcoin instead. So in general, I mean, it just makes more sense to me.
So the volume and the volatility and the liquidity, etc., especially compared to alt BTC pairs, just still not interesting enough. Like something, I mean, what Filecoin was churning and Yearn does all the time. Link, arguably, as well. Nothing.
I mean, I do trade them. Yeah, I mean, I do trade them, but I mean, I hate that they're the more popular pair because I mean, you're losing out on a lot. Like because if you're long, let's say you're long altcoin USD, right? And you're expecting an altcoin to do well, but you're not entirely sure if Bitcoin is going to do well or if Bitcoin is going to do poorly, right? So along this altcoin USD pair, the altcoin actually outperforms Bitcoin by 10, 15, 20%, but Bitcoin dumps by 40, right? You're losing money even though you were right just because you're trading the wrong pair. And I mean, the opposite is obviously true as well. Maybe you get lucky and the altcoin actually underperforms, but Bitcoin goes up, so you're kind of saved by Bitcoin. But I want to trade something that is actually kind of where I can actually have like thoughts. Okay, I think this is actually gonna do well, and then not really care about, okay, is Bitcoin gonna go up or down?
Yeah, I was gonna say, do you not think the correlations are far less rock solid, at least, especially with the very, very new coins, with regard to Bitcoin's price action? Like for the old BTC pairs, I entirely agree, and that cycle and those correlations seem pretty fixed as far as these things go. But there's like a whole new class of speculators, etc., who are on FTX, for example, or other linear futures exchanges who have these new coins on, stable coin margin, etc. And it doesn't matter the day, it doesn't matter what Bitcoin looks like, there's always moves to be played on those. Or do you still give a lot of weight to the correlation that you mentioned? And you need to have a clear view on Bitcoin and then decide what you want to do with altcoins.
Yeah, I mean, those when they move really, like when they move a lot, right? And they kind of oscillate like 20, 30% up or down. It's not as important what Bitcoin does for those trades, but it's still going to suck if you caught on, like, let's say you're really bullish on a coin fundamentally. And I mean, I know like if you're fundamentally bullish on something, that doesn't necessarily mean you should take leverage trades on it. But let's say you say, okay, I see that this coin is going to do well even against Bitcoin. And then you buy it and it dumps. And then like Bitcoin dumps and you're stuck with it. Or worst case, like it just kind of counteracts the Bitcoin move and it doesn't move. And then Bitcoin goes up and it doesn't move and you're just stuck in a position. So in general, I mean, yes, do trade them. I mean, when they're volatile, whatever, doesn't really matter. You can trade them. It's just the ones that are important to me is always going to be, okay, Bitcoin pairs. Because, I've said it a couple of times now, just because you're taking on more risk if you're trading an altcoin over trading Bitcoin, because the altcoin is not around for as long. I mean, you could get rug pulls for the newer coins, for example. You could get like devs exit scamming. You could get a lot of stuff going wrong, right? Whereas with Bitcoin, I mean, there's very little that could go wrong that wouldn't go wrong with any other coin, right? So you have like these risk factors, and by taking on that additional risk, what you're basically saying is, okay, I'm taking on more risk for more reward, right? And the more reward is outperforming Bitcoin. And if you can't do that, then you're actually just taking on more risk. So it really does matter if your pick is actually outperforming Bitcoin. So that's why I tend to chart the Bitcoin pairs, just because, I mean, it's important to know or to kind of understand what you want to be trading instead of, okay, it's just up or down, in my opinion.
So you kind of see holding Bitcoin as kind of the risk-free rate, right? And then if you can't at least outperform that, and then given the additional, if you will, counterparty risks you're taking on, if you can't tick those boxes, then it just doesn't make sense. Is that kind of a fair summary?
Yeah,
I guess
much.
It creates this weird exception where a lot of traders on just straight up linear futures exchanges, or whose collaterals and stable coins, etc., they kind of don't necessarily have that fixed in Bitcoin, whatever spot long, net long Bitcoin position, if they've just got whatever fiat or stables on exchange. So I guess that applies slightly less in those cases. But I guess maybe to some extent it's counterbalanced by just owning cold Bitcoin elsewhere. I'm just really interested in the new dynamics that have evolved as a result of linear futures just gobbling up so much volume and market share. I think this will be something to explore for next year, especially as it becomes more canonical. But I agree, your framework just makes sense, right? Like holding Bitcoin is a risk-free rate. Most people still hold Bitcoin. You take additional risk by trading altcoins. If you can't outperform Bitcoin by longing that altcoin, probably doesn't make sense to do so, assuming spot exposure. It's kind of a one sentence summary attempt.
Yeah, I think that's fair.
Yeah, I guess the reason or the place where my question comes from to a large effect is, looking at a lot of the newer coins, and they trend so nicely on lower time frames, right? Lower time frames, even higher time frames, they just seem to have a mind of their own sometimes. So it's tempting to almost write them off as just another instrument to trade, as opposed to something to measure against. How's it doing relative to Bitcoin? Is it strong or weak against Bitcoin, etc., etc. But as you mentioned, if you take a kind of another step further, maybe there's no running away from that relationship ultimately.
I mean, in general, if you look at those coins, right, and you're like, okay, YFI,
Well, they're
for
all up a
example,
lot today, by the way. I've got this DeFi blue chips watch list of Yearn, Uni, Aave, Synthetics, Band, Sushi, and the Index and FTX, and I'm seeing like double-digit percentages here. That's kind of what I mean.
It's kind of crazy. Yeah, but the thing is, like, they're also doing really well against Bitcoin.
Yes, of course.
So it's like it doesn't really take away from anything because, I mean, they're really good trades even against Bitcoin, right? If they weren't, they wouldn't go up that much. So
what's the liquidity like on these old BTC pairs when you've poked around? Because I bet it's worse than the USD pairs, but it's still good enough for you to express a view, or what's...
I mean, that's the problem with like this entire move. I mean, that's not... I mean, like I said, I trade the USD pairs, but I do it in a way like I'm not happy with it. I mean, I have to because those are the liquid pairs.
Yeah.
And what you can do, I mean, it's just...
It makes trading trade, right?
Yeah, it kind of makes trading more complicated, in my opinion. Because what you have to do is, let's say you're bullish on an altcoin and you're trading the altcoin perp or whatever. You're trading YFI against the USD, right? And then you're like, okay, I'm really bullish on. I mean, I can show the chart.
Sure.
I'm really bullish on YFI against Bitcoin. But I'm not entirely sure where Bitcoin's gonna go, and I don't want to take on that risk at all. I don't want to. So what you do is you long a certain amount of this, and then you short Bitcoin, and then you have the same kind of position again, roughly anyway. The problem is you pay double the fees, and I mean, 2 positions pretty much double the way to mess it up. I mean, no one's kind of safe from that. Like, the more positions you have open, the more confusing it gets, even though it's really simple. It's just, I don't know, the human mind works like that. Yeah, I mean, it's the same position, right? In the end. But you have 2 things open, so you're like, it's very easy.
Different exchanges, most likely as well, right?
Yeah, or even just in general, just closing one, keeping the other open when you shouldn't, that kind of stuff.
Sure.
It's easier to mess up, in my opinion. So you either do that, or you're just like, okay, I'm bullish this, but I'm not sure what Bitcoin's going to do, but I'm going to take on that uncertainty. And then you have an additional thing that you have to kind of worry about, that you don't really know what's going to happen in your trade, that you actually don't want to have in it. Because you don't want to trade something where you're not entirely sure what's going to happen, right? But let's say you're bullish on Bitcoin and you're bullish on an altcoin, right? Then it's really nice to be long a USD pair. And I've done that in the past. I've been really bullish ETH back at 100, and I was like, holy shit, I'm gonna get to long this on a perp, or I'm gonna get long this, and then just double dip. Bitcoin's gonna go up and ETH's gonna go up. And then I'm just gonna get rewarded twice, and I mean that is what happened. So I mean, you can use those tools in multiple ways, and it's just, for me, it's easier to express my view on the market on the Bitcoin pairs.
Nice.
I mean, that's the easiest way to say it.
Yeah, that's well said. It's just crazy, even looking at your watch list right now, with regard to these correlations and these relationships, like seeing the old guard and majors old BTC pairs bounce, like EOS 5.5, TRX 2%, etc. And then again, going back to the DeFi watch list, you're seeing like 17, 24, 25, 15, etc. So I guess you can see like the relationships and the correlations are still very similar, but I guess they just get exaggerated both ways in the linear futures contract, potentially. But like, again, looking at how some of these old like majors have turned out, some of them are arguably just very hard to trade, given you've got like no technical levels and just new lows being made all the time, you know?
Yeah. I think in general, it's just the newer the coin is, just treat it as you're trading with another X or two in leverage.
Yeah.
So you're trading Wi-Fi, like you usually trade EOS, right? And you're trading that, and you're happy, and then you move over to Wi-Fi, and then you trade with the same position size, and you're suddenly down and up like 10 times as much.
Yeah.
And you're like wondering, oh shit, where has my money gone? Or holy shit, why am I up so much? And I mean, that's just something that you kind of have to figure out. Let's say you're trading a new coin, the gains are going to be bigger, the losses are going to be bigger. And I think it makes a lot of sense to seek out that kind of volatility in general. But I mean, it always depends on the kind of person that does it. Some people can't really deal with those kind of big movements and much rather have them small. Some people want to get in. The sad part is that even the old cut doesn't really have as much liquidity as the newer ones. Yes. So it's kind of like, for me, in my mind, it makes very little sense to trade EOS right now when you can trade Wi-Fi, when you can trade Link.
Yeah, and express the same sentiment with regard to altcoins generally, right?
Yeah. And then you can take on a smaller position, have less money on the exchange, risk less counterparty. It just makes a lot of sense. I mean, I'm saddened by it because I've gotten to know these coins over the years.
So you're just nostalgic.
And not even that. It's just like when you know the kind of kinks of the coins and you kind of know what's up, it's easier to kind of be certain of your position. So for example, like when we're talking about XRP, I know that there's not going to be a sudden rug pull on it, right? I mean, I don't trust these people further than I can throw a stone, right? But I know that they're not going to just suddenly disappear, right? It's not going to happen. Whereas when we're talking about Wi-Fi or like, I mean, now it's starting to get older and it's the same kind of thing. People trust it more and more. But I mean, there's always going to be this time aspect to it. Like every new coin has to kind of stick around for a while for people to actually trust it to stick around for longer. I mean, it just makes sense. And so I kind of value I'm not going to get rug pulled on this aspect to trading these older coins. But then again, when you have all the volatility and liquidity on the newer ones, you kind of have to adapt.
I agree. It creates an interesting dynamic, I think. And also, I suppose having the linear futures option lets you express a view with regard to altcoins without necessarily getting rinsed on your Bitcoin, right? Which is like in very explicit terms. Like you can just like risk USD on the trade, you lose USD on the trade, and then yes, you could have made more if you'd longed Bitcoin, etc., etc. But like in explicit terms, you can more readily express views with regard to altcoins without explicitly doing so at the expense of your Bitcoin, which is cool, I guess, right? Just more options.
Yeah. I think in general, the thing is, it kind of depends on your standpoint on where you actually have your money in the market, right? Yes. Let's say you have your money in USD the entire time. It obviously makes a lot of sense to look at the USD pairs, right? For me, and I mean, that's always been the case, I've always much rather had Bitcoin. Like I can kind of short hedge that away if I want to.
Yeah.
But I've always had Bitcoin as my denomination, I think that's the English word for it, of my trading capital, right? So for me, it's always Bitcoin and thinking about, okay, am I going to make more or less with it? And then when I get bearish, I just try to protect the USD value by just short hedging. But it always goes back into Bitcoin. And then sometimes I obviously sell the gains that I've made and that I do and push it into USD. But in general, like I tend to think in Bitcoin terms. And if you don't, it obviously makes a lot of sense to. And I think a lot of new market participants don't.
Totally. That's what I'm getting at. I think, and it's a benefit because it's just more flexibility, more choice. The volume and the dominance and just generally the proliferation of these linear futures platforms, they allow you to be a kind of crypto trader without being Bitcoin fixated, right? And you can just trade all these crypto instruments for fiat and not have to worry about like if Bitcoin isn't your benchmark, you can still take full part in the ecosystem, which is my point. You'll remember, the wisdom, if you will, from 2017 was that the altcoins they only exist for making you more Bitcoin, right? That's their sole purpose, and it made sense at the time as well because alt BTC pairs were like mega liquids, like the only thing going around, right? All the alt USD pairs were calculated by TradingView, and we had those. On Twitter, do you remember those up in USD discussions? Which makes sense now, potentially, but you actually didn't have USD pairs to cash out on for those altcoins, right? So, like, what do you mean you're up in USD? Like, if you just held Bitcoin, you would have outperformed that. I remember getting into a lot of fights on Twitter over that crap.
That was a crazy
people
time.
Just being really confused. But yeah, I think I just see it as overall positive development that we're kind of spoiled for choice. How you want to trade these markets, what you want to trade, how you want to denominate your portfolio. That's all... it just gives you more room to express any kind of long and short-term view.
I think it's a lot less noob friendly, in my opinion, because the thing is, if you're trading these altcoins, and in general, if you're in the market, and that's the case for most people, you kind of get into the market, you start out trading, right? And at least in the history of this market, that has been the case, that you get in the market, you trade, you usually start out losing money, and then you kind of get carried up by Bitcoin. That's been the case for me. That's been the case for pretty much everyone else in the market, where you just kind of get carried, like you do some stupid shit at the start, but given that you have your money in Bitcoin that you're trading with, somehow, no matter what kind of stupid shit you do, and I mean, everyone that starts out does stupid shit, you kind of get carried over by it being denominated in Bitcoin, because Bitcoin goes up. Yes, you have less Bitcoin, but you actually have more money in the end. Yeah. And the opposite is kind of true, in my opinion, if you based everything in USD. I mean, it obviously depends on your macro view on Bitcoin. If you're kind of thinking Bitcoin goes back to like very low, whatever that low might be, then you obviously want to kind of be focusing on the USD trading, because obviously. But the thing is, like, if you think Bitcoin goes up over the long term, it kind of makes sense to not think too much when you're trading in the USD terms and much more in the Bitcoin terms. But yeah, it kind of depends on your macro outlook. Yeah. If you're bearish on Bitcoin, don't stick too much with the Bitcoin view on it. And if you're bullish on Bitcoin, definitely don't be the guy that trades like everything in USD and is up and is happy that he's up in USD, and then missed the entire run up on Bitcoin and is only up like 5%.
I still think it's fair, no matter how like USD stablecoin oriented you may be, that if you're in the crypto ecosystem, you need to ask yourself as a trader whether it's worth trading if you can't just outperform sitting on Bitcoin for even over, let's say, a year or however long it makes sense for you to look at that. But I will say, as a final point on this topic, a good benefit of the I suppose dollarization, if you will, of trading is just that, right? Like hedging and converting to stable coins and doing all that type of stuff and getting fiat in, out, etc. The infrastructure for that, because of these USD denominated platforms, has just become beefed up a lot, which just gives us more choice and protection, which is always nice. I appreciate that kind of knock-on effect. It's just like when Uber became really popular in London. Like, black cabs are still used, but now they all you can pay by card in every single one of them, right? It's kind of this knock-on competition, Milton Friedman bullshit capitalism effect, I guess.
Yeah, I mean, it never hurts, right?
Never.
Choice never hurts. And I mean, I'd love to see the day where the altcoins aren't reliant on Bitcoin movements anymore. Then you would just have more markets to trade, right? Right now, it's basically you're either expecting Bitcoin to go up, therefore you do this with altcoins, or you're expecting Bitcoin to go sideways, and then you do this with altcoins.
Or you found like a short-term counter correlation, whatever, negative correlation move.
But like the macro view is always, you look at Bitcoin first, and I think that's one of the things that a lot of altcoin investors kind of do wrong. They don't look at Bitcoin and they're like, okay,
I can taste the venom in when you said investors there.
I mean, with the altcoin things, I mean, my view on the altcoin investment is that it's pretty much impossible to know what's like gonna go up in the next 10 years.
We should get Not So Fast for a casual Friday. He'd be a cool guest.
Yeah, definitely. Yeah. That's actually something we could do. Yeah,
totally.
He'd be down, I think.
For sure. Sorry, I interrupted there. Just thought came to my head.
Yeah, no, it's a good one. But yeah, I think it's pretty impossible to kind of guess what's going to be up in 10 years. And if you're like an investor, I think like you can't really call yourself an investor if you're like, okay, this is going to go up for the next 6 months and then going to collapse and go to zero. That's not really investing. But yeah, some people like kind of spot out stuff early. I can't do it, so it's kind of like not my forte. But I think what a lot of investors do wrong is that they underestimate the impact Bitcoin has on all of these coins, because it's a Bitcoin market more than anything.
And we're seeing that right now, right?
Yeah. And I mean, you gotta be able to live with that, in my opinion. But if that changes, I'd be more than happy, because then it's just more opportunity.
Agree. Fantastic. Well, we've covered a lot of ground, I feel like. Probably makes sense to wrap up and let our viewers enjoy their weekend. That would make sense. Thank you, first of all, Duck, for your company, wisdom, charts, presence, everything you bring to the table. Second of all, thank you to Bybit for sponsoring Technical Roundup. Again, we are grateful for their support. Be sure to check them out to support the streams, keep them free. In the description below, their links can be found there. If you have any questions, link to their Telegram is there as well to go and speak if you must. Next up, like the video if you haven't already, of course. 129, I see. Very grateful for your support. Those ratios are very kind, and they do mean a lot to us, so thank you. Final note, you'll have me on Monday. I suppose I've leaked part of the preview. We'll be talking about these DeFi blue chips. God knows what they look like at that point. And then the good old Bitcoin, Ethereum, fun stuff. Duck, thank you again. Audience, thank you for your time. Have a great weekend, and we will see you next week.
Bye-bye.